Masood Ahmed, thank you for joining us. Oil prices have continued to drop since June of last year. What is the impact on the oil exporting countries of the region?
The immediate impact of lower oil prices is, of course, to reduce the revenues that oil exporters get, both on their balance of payments and on their budget. So the oil exporting countries in the Middle East and North Africa in 2015 are going to have about $300 billion less in terms of their export revenues than we were projecting in October. That's almost a fifth of the size of their economy. So it's a substantial amount. Now, at the same time, many of these countries have large buffers in terms of financial resources that they have built up over a long period when oil prices were relatively higher. And so they can use some of these buffers to try and slow down the impact of these reduced revenues now. And as a result, during the course of this year, while we expect that their spending plans will become a little bit lower, it will be a gradual process. And so for this year, we are projecting growth for the oil exporting countries as a group of about 3%, which is a little bit better than last year, but still 1 percentage point lower than what we had been anticipating before the oil prices came down.
How is the oil price drop impacting the oil importing countries of the region?
Well, the oil importing countries, of course, get a little bit of very welcome breathing space from having to pay less for their oil imports. But the share of oil in their economies is more limited. It's smaller than it is for oil exporters. And that, combined with the fact that there are other factors at work in the world right now, a slowing down of Europe, possibly a slowing down of the GCC countries, which is a source of remittances and trade also for the oil importers in the region, means that the net effect in terms of their growth for this year more or less is the same. It comes out as a wash. So our projection for this year for growth in the oil importing countries is just about 4%, which is more or less what we were projecting in October.
And how should policymakers be responding to the oil price developments?
Well, it depends a bit on your starting position. So for oil exporting countries, some of them have large buffers, so they can afford to take a more gradual approach in terms of adjusting their spending plans. Others may have to do it a little bit more quickly. But for all of the oil exporters, the challenge now is going to be to try and adapt their spending plans over the next few years to adjust to the new realities. It depends a bit on how long these lower oil prices are likely to last, and there's quite a lot of uncertainty around that. Nevertheless, our advice to oil exporters is that this is an opportunity for them to begin to adjust their spending plans in a gradual way down to match the new revenues that they're likely to have. At the same time, to look at how effectively the spending really is delivering their objectives, both in terms of growth, in terms of protecting the poor, in terms of encouraging the diversification of the economy. And one area where specifically oil exporters can do more as they go forward is to look at the price of energy products in their own economies, which are still subsidized even though oil prices have come down internationally. And finally, I would say for oil exporters, one challenge is that in the past their growth model has been driven by continuing government spending. And if the government spending is going to be a bit more constrained for the years to come, then that puts more impetus to try and find a growth model which relies more on a self-sustaining private sector. Now, just say a word about the oil importers and what's our advice to them. Well, the oil importers, of course, have the opportunity now to use some of the savings that they get from having to pay less for oil, partly to try and strengthen their own resilience, because some of these countries start from a position where their fiscal positions are a little bit strained, so this is a good opportunity to try and build some more buffers. Also a good opportunity to try and reallocate some of that money towards spending for infrastructure, which will give growth, and also to try and improve safety nets, which will protect the poor. But again, the advice for them also depends country by country on the place from which each country is starting.
Mr. Ahmed, thank you very much for being with us.
Thank you.